The world's greatest geologist is on the verge of his next billion-dollar discovery. With looming shortages in copper, zinc, gold, and silver, this may be the best opportunity hard asset investors have ever faced. Learn more at futuremoneytrends.com/hardassets.
Well, hello everyone, and welcome into crushthestreet.com. I'm here with a special guest. His name is Steve St. Angelo, and he's with SRSRocco His analysis on precious metals and energy is extremely extensive and very informative, and I'm excited to be able to speak with him today. It's a treat and an honor to speak with the man himself. Steve, thanks for joining me.
Kenneth, I'm glad to be here. We're having some interesting times, especially today in the broader stock markets. The metals have popped. It's nice to see that, so I'm looking forward to chatting with you.
Absolutely. Well, we are going to get into metals, but I did want to talk about oil. And you've done a lot of research on peaking oil, what's going on in the Bakken and the Eagle Ford range. And this peaking oil, you've connected some dots for us that are really interesting in how this will affect other markets, such as precious metals, real estate, and the overall crash. And I wanted to start off by asking you, why is this interesting and why should we be paying attention to oil at the moment?
Well, you know, energy has always been the key to everything. During the Roman Empire, it was labor, or it was their military energy. And now it's oil, natural gas, coal, and that tends to drive the markets. So energy is the key. You can't mine gold or silver without energy, without human labor. You need those two. And so the whole market runs on energy. So I was investing in precious metals, Kenneth, early on in 2002, but I didn't realize how important energy played as a part until about 2008. And the world has been in a plateau of energy production, conventional, since 2005. We've been in a 10-year plateau. The only thing that's really has grown is unconventional, and that's very expensive oil that is not sustainable. So the world, instead of having a growing conventional oil production, we've had a stable. So to give the illusion of growth, the Fed and central banks have been propping up the market with trillions of dollars of liquidity. And this inflation is the illusion of growing GDP when really we haven't had that. So if we look at where energy is going, and when it peaks, it will show us how things occur in the future. You cannot have a growing GDP in a falling energy environment, especially a manipulated GDP. So already we're seeing that the great illusion that the U.S. was going to be energy independent, we're seeing that has finally popped because the Bakken and Eagle Ford, which are the two largest shale oil fields in the U.S., according to the EIA, which is the U.S. Energy Administration, they already peaked. It's a done deal, Kenneth. It's over. So now we're just going to wait to see how the declines are. And if we understand shale oil, they decline 40 to 50%. The well will decline 40 to 50% first year. So especially with these low oil prices, I think we are going to see a 33% decline in U.S. domestic oil production by 2020 and possibly 60 to 70% by 2025. So the U.S. will have to run on much lower energy.
I mean, that's some pretty substantial numbers right there. Steve, how does that relate over to precious metals and then over into the overall real estate market? And I bring up real estate because that's an important topic for people. People have to have a place to live, and going in and buying something that's significantly overvalued isn't something that people want to do. So can you give us an idea of what you see happening exactly with precious metals and how it relates also to the real estate, which I actually do consider a hard asset?
You see, but this is the topic that needs to be discussed because alternative investors, such as precious metal investors, a lot of them still believe that because they don't understand energy, they think we'll have a crash of the system and then we're going to start in the future to recover, and then we'll have more growth, and then to buy real estate and businesses, and so everything's going to be peachy after a huge crash. Well, you can't have growth if you have continuing falling energy production, and that is happening. So where do you park your money? Where do you park your wealth? Well, most of the stuff out there, paper, whether it's stocks, bonds, retirement accounts, mutual funds, insurance funds, they base their valuations on net present value. And basically, they take future earnings, future forecasts, and they make a stock price today. Well, what happens when the world realizes we're not going to have growing energy supply? We're not going to have growing earnings. Well, the whole idea of net present value, the light goes off, the market goes, oh my gosh, well, the stock isn't worth it. So we're going to see an implosion of paper assets. Well, what's left over? Well, there's physical assets. And let's not talk about precious metals for a minute. Let's talk about real estate, commercial, residential, industrial, and as well as businesses. Well, what happens in 5 years when the United States has 33% less oil, or 10 years when we have maybe 60% less oil? And I think we're not going to be able to import as much oil because the dollar will be toast by then. So we can't exchange paper money for real oil. So how do you run Dallas, Texas, and LA, and Chicago, and New York on half or less of the oil? What happens is you have less business activity, which means you have less vacant homes, vacant buildings. This is going to destroy the valuation of most real estate and most businesses. So where else are you going to park your money? And the reason why precious metals are probably the safest assets to own, because they are stores of economic energy. Each ounce of gold, Kenneth, or an ounce of silver was mined, and that energy capital is stored in that coin. Somebody else has to provide labor. Somebody else has to provide goods and services to take that gold and silver coin. All the other assets, paper as well as physical, need growing energy supply to give them value. As energy supply contracts, we're going to see decades of falling prices of these other assets. So this is the gold and silver are the high-quality stores of economic energy, while most paper assets and most physical assets are actually energy-intensive or energy IOUs, and investors need to understand the difference.
Well, we just talked about peaking oil, but you've also done a lot of research on peak gold and peak silver, and I wanted to kind of jump over and focus on precious metals now. Can you share some insight on this, Steve?
Well, I've always said that I think we're going to see peak mining shortly after peak oil production. And again, we, according to the International Energy Agency, we are seeing a still increase of total liquids. But this includes natural gas plant liquids, biofuels, processing gains, and these aren't high-quality oil liquids. Matter of fact, natural gas plant liquids, they fetch a price 40% less than a barrel of oil because they have 40% less. They have actually 60% less energy equivalent as a barrel of oil. So we're growing in that stuff, but that doesn't really run the system like oil does. So I was trying to figure out, all right, how are we going to compare the gold mining industry to the silver mining industry? I do see peak gold and peak silver shortly, but in a different way. Let me explain. According to the Barrick's sustainability report, it took 20.8 gallons of diesel to produce an ounce of gold in 2014 for Barrick. Now, I went to Pan American Silver. They're not the largest silver producer, but they do provide pretty good information that they also provide a sustainability report that shows their energy consumption. Well, Pan American Silver only consumed 0.2 gallons of diesel to produce each ounce of silver. So basically the gold mining industry is consuming 100 times more liquid fuel to produce gold than produces silver. So what I see going forward, I see a peak in gold production because 80% of gold production, Kenneth, is primary. But I see a peak in global silver production because of the base metal mining industry. Copper is very energy intensive. I think we're going to see a peak of silver production global because of a peak of base metal mining. But if investors want to invest in mines, I think the best investments out there will be the primary silver miners, because they use very little energy to produce silver. And once silver revalues in price, I think we'll see a growing primary silver mining industry for several years, even as the world peaks in oil production.
Yeah, so more of a long-term bull market. Steve, because of manipulation, we're always trying to get a feel for what's happening with actual physical demand. And talking about silver, and in one of your recent articles, you wrote about soaring silver demand. Can you share a little bit of your research on what is going in the physical markets as opposed to the paper trades that are out there?
Yeah, right now, as it continues to be, the COMEX and the LBMA, they tend to dictate what the prices of gold and silver are going to be by moving a lot of paper around. But as we're seeing this huge demand for silver, and what's happened is now moved into the wholesale market. And for example, I just did an update on my site. U.S. silver imports this year for the first 5 months are up 27% compared to last year. We've imported another 525 metric tons of silver. But industrial demand has actually declined because our GDP has fallen this first quarter compared to the first half almost compared to last year. Silver Eagle demand for the first half was relatively flat. And so when you look at those, and the COMEX really didn't change all that much. So when you look at that data, the U.S. did not really need to import more silver, but we imported 27% more. And what's happening, and from what I've been talking to different folks in the industry, there are big buyers coming in and buying silver. There's been speculation that J.P. Morgan might be buying silver, and this is not silver they're putting on the COMEX. This is a whole different deal. And I hear from some of the larger retailers that 80% of their precious metal buying, especially over the past 2 months, has been silver. And this just isn't mom and pop. These are large individuals, big entities coming in and making 6-7-figure purchases of silver. So, and as we look at the recent data too for Silver Eagles, and it gives some indication what's going on. Even though the U.S. Mint sold a lot of Gold Eagles last month, 176,000. So far this month, it's only been 7,500. But Silver Eagles are over 2.1 million. So here's the interesting thing. Last month, when the world thought we would see a Greek exit, they got really concerned. So there's a lot of gold buying. The gold to Silver Eagle ratio last month was 31-1. That means investors bought 31 ounces of Silver Eagles for every gold. So far in August, it's 281-1.
Wow.
Investors are buying 281 Silver Eagles for each Gold Eagle. So for some reason, investors are really buying a lot of silver. And yesterday, we saw another 1.2 million ounce withdrawal out of one of the depositories, and the net was almost 1 million ounces. And just in the past month or so, we've seen about a 14-15 million ounce draw off the COMEX. So I believe if the situation continues to deteriorate, especially in the fall, we could see global silver shortages. Because right now it's hard to get, you have to wait 2, 3 weeks, 4 weeks to get some product. And as we're starting to see, it's making its way in the wholesale market.
Right. Now, and even for me, I'm much more inclined to buy silver at the moment just because of that gold to silver ratio, and more so the price. I wasn't actually thinking about the purchases of gold versus silver, but actually just the price of gold to silver. But just shifting gears slightly, I'd like to ask you about China's announcement of their gold reserves. And they only increased officially their reserves by 600 metric tons. Do you believe this number, Steve? And do you believe that they're covering up something bigger? And why are they doing this?
Well, it's all going to be speculation. And we know a lot of a lot of gold has been heading west. And it's been doing that for probably, according to Alistair McLeod of Gold Money, he thinks it's been going on for 2 decades. I would imagine a lot of it is in private Asian hands, as well as India. But I think the announcement was a political announcement. It was one of those things where they wanted to give some confidence to the market, so they had to put a statement out. But they didn't want to spook the markets, because I think if you spook the markets and you say, well, we really have 15,000 tons, well then the market changes overnight. And just like we're seeing now, that the Chinese went ahead and surprisingly devalued their yuan just in the last couple of days, it's caused huge volatility in the markets. Can you imagine if they announced 10 or 15 or 20,000 metric ton reserves in there? It would have done much worse.
Yeah.
So I think they have the gold. We're not quite sure how much they have, but we'll know probably. We'll probably know at some point in time how much they have.
Well, I would imagine the free market and just the physical demand of it will eventually cause that number to come to light, especially with all the people out there trying to figure this all out. Eventually, the truth will be told. So, but I
agree.
Yeah. So, and lastly, I wanted to ask you about a different topic that I actually didn't know you did research on and knew about, but this is solar energy. And as most people know, solar energy is something that the government has gotten heavily involved in. And when the government gets heavily involved in something, the markets get distorted. And I know this, and I knew this when it came to solar energy. But where I live in Southern California, if you have a 3,000 square foot home or even a 2,500 square foot home, a pool, your energy costs could be anywhere from $500 a month to close to $1,000. And so the only viable option for people is to get solar panels. And that's the way for them to have an affordable energy bill each month. But according to you and the research that you've done, there's a big misconception out there, and the markets are greatly distorted, and I was hoping you could shed some light on this issue.
All right, and I'm going to be a little bit long-winded on this one because this is an important topic to discuss. First of all, there are two ways to look at solar. There is the ability to put solar panels on your home to guarantee that you're going to have some stable electricity if the grid goes down. That is a good thing to do. If you buy your solar panels, you pay cash, you don't care about a return on investment, you just care about guaranteed power to have a computer, light, certain things, I think that's a very wise thing to do. Now, trying to scale solar and wind or renewables on a major scale, that's a totally different ball of wax. And I started researching this a few years ago, and I came across a gentleman, he's got his own website, named Jerry Graff, and he's a mechanical engineer out of Ohio. And he started noticing that these solar and wind farms were going up across his state and across the country. And so he started doing estimated cash flow analysis on these. And I contacted him, and we spoke, and he said, all the ones that I've done, if they get paid normal wholesale electric rates, these wind farms and these solar farms can't pay for themselves. And as a matter of fact, he had this one post he put out, which is what happened to the $5.4 billion that California spent on 3 solar projects. And those are the California Valley Solar Ranch, the Antelope Valley Solar, number 1, and then the Topaz Solar Farm. And these 3 solar farms are supposed to generate 1,050 megawatts of power. Well, taking into account all the costs and then applying what a wholesale rate of electricity that is costed into the system, he found out that after 30 years, only 40% of that $5.4 billion would be paid back.
Wow.
So where did the money come from? Well, the money came from low interest rate loans to the government, and then what is known as purchase power agreements. And that's where, let's say, PG&E, which is California's power company, they have to pay solar and wind elevated sometimes 2 to 3 times the wholesale rate. And that's the only way solar or wind is viable. And lastly, Spain spent a lot of money, government money, putting together one of the largest solar systems in the world. And according to a book called Spain's Solar Revolution by Pedro Petro and Charles Hall, they found out that, and let me just read this. To kickstart the solar revolution, the Spanish government promised massive subsidies to solar PV providers at 5 times the cost of fossil fuel generation for 25 years. Eventually, it was hoped that solar power would be as cheap as power generated by fossil fuels. What was the end result? Well, it was a massive transfer of public wealth to these private solar investors. And what's happened is 44,000 of the 57,000 PV installations are near bankrupt. And the system is a total boondoggle. And a lot of these companies that were in Spain were threatening to move out because the power, the electricity rate has increased tremendously to pay for this solar. So it's just another example where government tries to come in and put solar on a massive scale, and it just doesn't pay for itself. And that is the problem with solar and wind. Renewables are they're fossil fuel derivatives. They're good to have on a local or, let's say, on a house-to-house basis, but they don't work on a large scale.
You know, it is really amazing. And out in the Inland Empire in California, solar and wind too, but solar on a much larger scale is almost everywhere. And then when I visited different parts of the country, people don't have these solar panels all over their roofs. And the reason, and like you were saying, is because California has instituted this drive towards solar and has distorted the market. But where you go to other areas that don't have this manipulation of the free market, the electricity cost is much lower. And it's amazing that this isn't a more widely talked about story, Steve. This is something that people need to know about.
Well, you know, there's this notion that technology will solve all problems, and when you understand the energy return on invested, which is how much energy you get for how much energy is invested, that simple equation shows that solar and wind don't work. For example, even though the United States has added a lot of solar and wind over the past decade, do you know, according to the EIA, fossil fuels produced almost 70 quadrillion BTUs of power in 2014. 70 quadrillion. Mm-hmm. Do you know what's solar and wind? It was 2.
Wow.
So even though we've increased solar and wind power in the past decade, it only represents 3% of total energy production in the U.S.
This question actually just came to me, and I'm just curious. Do you know if solar panels have a net positive in terms of their impact on the environment? The argument for environmentalists and government is that using solar is better on the environment than actually going about and using fossil fuels. So I'm curious, with the production of all these solar panels, if it's actually a benefit, a positive for the environment to use solar panels as opposed to traditional fossil fuels.
Well, I don't know the exact data, the figures, because it's almost too hard to do that. And the problem is this: the problem is fossil fuels do put carbon in the air, and it's pollution. So you think if you've got solar panels magically that appear on your roof, or they're a big array out there in some desert, you think, well, this is clean. Well, it took a lot of fossil fuels to create those solar panels, and that's what people need to realize. Without fossil fuels, you cannot manufacture those, because the stuff has to be, the ingredients or the materials have to be mined, they have to be transported, and then right now we need a lot of coal, natural gas, and nuclear as well to make the electricity that runs the manufacturing plants. So again, solar isn't possible, or wind isn't possible without the coal, natural gas, and oil.
And as you pointed out, it's not that they're producing that much of a benefit in terms of energy compared to fossil fuels. So, and the whole idea of something powering itself, using solar energy to create more solar panels, that doesn't work either. Physics would tell you that doesn't work. So, Steve, I really enjoyed this conversation we had, and I just wanted to give you an opportunity to share any last thoughts you might have had that you wanted to share with us before we ended.
I want your investors to realize going forward, what's going to happen in the next 5 to 10 years, it'll change how Americans and people in the world look at life. Because when the Roman Empire collapsed, there was supposedly, the 1,000 years of the Dark Ages or whatever. And it's going to be a totally different world as energy production declines. So people need to brace themselves and get ready for that. And I think the precious metals are probably one of the best assets to own. And lastly, I put out a new report called the Silver Chart Report on my site, where I have 48 charts showing. And it's one of the only reports, I think, on the internet that's so diverse, that shows such a range in the silver and silver industry. And there's one chart in there that I believe 99% of investors, of precious metal investors, have never seen before. And so it's definitely worth a look. But again, precious metal investors, alternative people in the alternative industry need to understand energy, because energy will be the factor that stops the manipulation. People keep saying, well, what can the central banks and the Fed continue to manipulate prices of the precious metals in the system? Well, they can in a stable energy production environment. They cannot in a falling. So we're about to be in a falling global energy production environment, and that is something central banks cannot manipulate paper. So once investors understand that, the best place to be are in the physical precious metal assets or some of the mining shares.
That's great advice, Steve. And if people wanted to find out more information about you, where would they go and what would they find?
All right, you can go to the SRSRocco Report, and you just Google it, or go SRSRoccoReport.com, and I put out 2 to 3 articles a week normally on precious metals, energy, supply and demand, and I'm going to put out a new article here in the next couple of weeks on the break-even for the primary silver mining industry. And so far, again, most of them are losing money, unfortunately, but I think that will change in the future. So if your readers want to check that out, I put out one every quarter to hear what the estimated break-even for the primary silver mining industry is.
Well, I appreciate that, Steve, and definitely check out SRSRoccoReport.com. Thanks, everyone.